Hi, everyone. I'm Ethan Zindler. I work for a division of Bloomberg LP called BloombergNEF, and our group focuses on tracking developments in what we call the energy transition space. What this means is that we write primary microeconomic research on trends in renewables such as wind, solar, geothermal, hydro, and other areas, as well as electric vehicles and other new area energy economy. For those of you who are familiar with clean energy, you may have heard of us as New Energy Finance. And for those of you who have a terminal or have access, you can check us out at BNEF Go, BNEF Go, NEFW Go, or BNEF.com. It's my real pleasure today to be joined by Patrick Decostre, CEO of Boralex, Inc. Many of you may regard the development of zero carbon energy as a relatively new phenomenon, but Boralex has been acquiring, developing, and owning clean energy projects since the 1990s. Here at BNEF, we've been tracking their activities since 2005 and have tracked their involvement in over 150 different power plants, many of which they still own today and others of which they've sold off over time. Boralex has been novel in its steady approach to developing relatively small wind, solar, hydro, and biomass plants in Canada, France, and the US. But with climate change, looming ever larger, the company has quite ambitious plans now to double its cash flow by 2025 by and investing in projects primarily in the U.S. They're headquartered in Montreal, and their shares trade on the Toronto Stock Exchange under the ticker BLX. All of you should have access to Patrick's biography online, so I won't go through it in great detail. But a few highlights are that he became CEO in December 2020 after spending 18 years with Boralex, starting as the company's first European-based employee, where he launched its successful wind project development business. And prior to joining Boralex, he was an engineer and project manager with EDF. So Patrick, welcome, and thanks for joining us today.
Thank you.
The subject of today's event, of course, is the role of institutional investors in infrastructure development. And I definitely want to come back and talk a little bit about that. But first, let's just start with some basics. Tell us a little bit about Boralex, your history, and then maybe a little bit about your current strategy.
Yeah, thank you, Ethan. First, Boralex is a 100% renewable energy company. We have started, as you mentioned, 30 years ago. We have developed a small hydro, then some biomass, wind, and we started in solar almost 10 years ago. We own 2.5 gigawatt in operation. We have doubled the size of the company over the last 5 years. And our plan is to double the size of the company again over the next 5 years. And our strategy is essentially to continue to diversify ourselves into, first in solar, to have a more solar exposure. Today we are really exposed to wind energy because this was the last wave of the company growth, and also to increase our exposure in the US, because this is a very, very big market and we are interested to go there, and also to start developing storage. We have a pipeline of 3 gigawatts of projects, so almost the size of the company today, in wind and solar, and 200 megawatt in storage already. And I think one thing, and we will come back, I presume, on that, is I think we have been an ESG company since 30 years, and we want to continue to be an ESG company with probably more structured and more disclosure, but that's also an important point of the company.
So just to follow up on a couple of those quick points. So first, maybe if you could talk a little bit more about storage and why is that, an area, obviously, this sounds like a relatively new area for you. Why is that an area of optimism and development? And actually go one step further and ask, is that really a requirement now these days if you're going to be a clean energy developer?
Yeah, I think there is two interests being in storage. One, if it is for the market and the system, the electricity system itself, where we are developing project, the more you have intermittent renewable energy like wind and solar, depending on natural resource, the more you need to have management of the equilibrium between production and demand. and then storage is there to do this. You have some big storage system already existing, typically in Quebec or part of France or Switzerland on their system. But in the system where interconnection of the network is not so important, you will need more storage. And sometimes storage is also very interesting for peak shaving, because the last kilowatt that you have to produce to be sure that you meet the demand costs a lot of money, cost more than the other one. And then sometimes just to displace this peak and make what this peak shaving is interesting. And on the other side, for a company like us, it's interesting because it's very complementary to the business we are already doing. Since 30 years, we are operating distantly, remotely equipment at a low cost. And if you add storage, it doesn't increase really your cost of operating, but it increases the service you can deliver to the system, and then it increases your revenue. So I'm sure that in the future it will be very, very important.
So it increases the hours at which you can provide power into the system, essentially, and sell potentially at higher, more profitable hours than you might otherwise, if I'm hearing you correctly.
Yeah, exactly. And it will smooth the volatility of the electricity price, and then increase the affordability of the energy transition. So it's good for the system and the market, and it's good for a company like us. And then there is a lot of development in storage, a little bit like in solar in the last years and presently too, but reducing of the cost. The industrial production of utility scale storage is reducing the cost. You are publishing a lot of things on that, Bloomberg, and this is also a good news for the system.
So the second thing that you mentioned, and maybe the equally important, was the one regarding the U.S. as a potential area for growth for Boralex. And as an American, and of course I'm here online just outside Washington, D.C., you're up in Montreal, I'm always happy to hear optimism about the U.S. as a market for growth for renewables. But tell me a little bit about why you think this is a good market to grow in over the next 5 years.
Yeah, we decided, we are in the US since 1998. We started there, but we have really decided 2 years ago in 2019 that we want to expand in the US because the market in Canada was, for political reason, closed for new development. And then we decided to allocate, we decided the US because there is a lot of coal production, there is a lot of nuclear production, and there is a lot of gas production of electricity. And then one day or another, this plant has to retard. And then we decided to allocate some resource from Canada and also some to hire some people in New York to start in the New York market. We are in the New York market with some hydro plants since 2003, and then it's the 11th economy in the world, just the state of New York. So we decided to go in this way, and we have been successful. Developing organic project, and then we have obtained 200 megawatt of contract last year, and we have bid some more just 2 weeks ago in an RFP there. We think also the connection with Quebec is important because understanding what is moving in the state of New York has some indirect impact in Quebec because of export from Quebec. And why the U.S. globally is we have reworked on our strategic plan, and it's really the place where the volume is there, and the commitment of Biden on the energy transition and on the infrastructure is so important, and the commitment of the different states also are very important. So we think it's a great thing. And I think just yesterday, the U.S. Department of Energy published a report saying that by 2035, 40% of electricity in the U.S. could be provided by solar. So it's so incredible. It's a continent. It's not just a country. It's a continent. It's great.
So a couple of things just to follow up on that. I mean, I'm struck by, first, you mentioned, of course, New York State, and so that raises the sort of importance of state-level policy. But you also mentioned the Biden administration. And certainly we've seen some very positive pronouncements out of the Biden administration, but the most important potential thing to get the U.S. on track to building a lot more clean energy is legislation that's currently not passed by Congress. And so I guess my question for you is, how much of your strategy now is contingent on Congress passing both the infrastructure bill, which looks pretty likely to pass, but also this reconciliation bill, which is the one that would have a lot more support for clean energy in it?
Yeah, I think we are in the business in 30 years. So we have seen in Canada, in France, and in the US a lot of change of legislation. So we know that the most important point is to develop the right project, is to develop a project where fundamentals are better than other projects in terms of resource, size, grid connection, and these are the main points. So we're developing good project, and we think that the market will adapt itself. Typically, if there is a change in the ITC, in the tax credit for investment, and if this credit become refundable, this will create a change, but this will be the same for everybody. What we think it's renewable electricity has become it's no more a subsidized business. It's a business which is competitive with the existing business, and we think then developing the right project is the right way to be sure that we have project, and not developing project which are depending on the tax, just on a tax law. This is very dangerous.
Understood. And before we move on, just to explain to the audience, here in the U.S., the production tax credit and the investment tax credit are two tax credits that have really been critical to the development of wind and solar in the U.S. There is talk in Congress of both extending those for a number of years forward, but also, as Patrick was mentioning, making those supposedly refundable, meaning that you could just take the value in cash, which is an important thing because it would mean you would not need to line up a so-called tax equity investor to exploit the benefit of the tax credit. Let's move on. I wanted to talk for just a moment about ESG and how that is factoring more and more into the work that you guys are doing. And then I want to come back and talk about institutional investors and the role that they play. But first, tell me a little bit, if you could, about ESG and how that's influencing some of the decisions you're making, and maybe more broadly, how it's influencing others as well.
Yeah, as I mentioned in the introduction, I think we are an ESG company since the beginning. You know, we are in the solution. We're in green electricity in 30 years. We have the bonus we are paying to the employees in 30 years is named profit sharing. You know, so we have really we know that we are investing for the long term. So we want to be, when we arrive in a place, we want to be good neighbors for the next 30 years with the community. We know we have developed projects with community, municipality, First Nations, and also sometimes industry, but we are sharing the profit of what we are developing, because it's the only way to be sure that your investment will be safe for the long term, and that's what we are doing. So what we have discovered probably 2 years ago, 3 years ago, is that when we made investor relation in Europe, we had a lot of question about this, and we say, okay, yeah, we're doing that, but you're not disclosing everything that you are doing. So we have really started last year to work on the disclosure of what we are already doing, and that was the first report we produced beginning of this year. And with this, we have structured 10 priorities. You can find that in our ESG report, a CSR report on the website. And with these priorities, obviously, when you are targeting things, you are measuring them, and then you are discovering that you can do better. And as a CEO, I don't want to say we are in green electricity, then we don't have to do anything on inclusion and diversity, or we don't have to do in biodiversity. I think this is all important priorities for the company. Even our greenhouse gas emission from our own activity, we're measuring that for the moment, what is called Scope 3, so including the indirect impact of our activity. So I think this is a way to be sure that we protect finally the value of the company and the assets on the long term. And that's my view of it. And as I mentioned, we have also some interesting project with First Nation in Quebec and in Ontario and in BC. And that's also something which possibly differentiate ourselves is to do project with the First Nations.
Great. Well, to build off the ESG theme for a second, so my sense is that ESG demands and investors demands that their funds are being put to work in ways that they think are ethically correct, for lack of a better way to describe it, is putting pressure on institutional investors, large pension funds and others that are composed of money from teachers and others, public workers, others. And we've certainly seen in the context of Canada, some of the largest pension funds being very active now in clean energy, whether it's in some cases literally buying projects, in other cases taking stakes in smaller developers. I guess a question for you as a developer of many small projects and many renewables projects, what do you see as the role potentially for institutional money in terms of furthering the energy transition?
I think there are a different way because we, as you mentioned, we are developing small but also large project. Obviously, we are trying to take this band of because we have grown the company a lot, so we need to have also important project. But I think for institutional investor, they can invest in the company for the long term. I think the track record of the equity of Boralex is a good way to see that we are creating value on the long term for the investors. There is also we have not gone for corporate financing or corporate bond really in the past because we are more financing our business with project financing, but this will change, and it is a part of our strategy for 2025 is to obtain a credit rating and issue some bond in the future. And obviously, if we can, I think normally green bond should be at a lower cost because it's a lower risk. Because when you see all the actualities of this summer, we are not affected by that because we're in renewable electricity, and then there will be no big change in our business if you are correctly diversified. And I think it's a way to protect the money of the investors too. So I think that's a way to invest in renewable business, and possibly on some large project. We have developed some important project. It could be also a possibility for an investor to be a partner on a project basis too. But this depends on the size of the project and the size of the investor, of the money the investor want to invest in just a project. So I think there is many ways to invest in our business.
This may be a question maybe for a creative accountant or lawyer, but I'm curious your thoughts, which is, we talked about the importance of tax equity being the primary source of capital for U.S. project development. Is there a route now for institutional money to play a role in tax equity, or is going to need to be some kind of policy change to try and unlock that pool of capital to provide tax equity credit?
I'm not an expert personally. Maybe you should ask my CFO about the details. But my understanding is that tax equity investors are really, sophisticated investor in the renewable business. They understand why it's so important. They understand that it's a way to invest their money, make the right return, and also allow the energy transition to be there. So I think there will be a lot with the ambition when I mentioned going from 4 to 40% of the U.S. electricity coming from solar. There will be a lot of place to invest for investor, and it's certainly less risky than to invest in fossil fuel companies and fossil fuel investments. So I think that's the way I see it.
We've got all of just 1 minute left, unfortunately, and thank you for your time. This has been a really interesting conversation. What one thing would you say would be the thing that keeps you most up at night, the biggest concern you might have about not doubling in size over the next 5 years? What could get in your way? What's at the top of your list of things that could set things off track?
But the most important point is if you want, yes, we want to double the size of the company, but with a disciplined growth. This is how we brand the company. And I think disciplined growth means maintaining the return as much as possible and giving the premium of the risk we're taking to the investor. And that means, yes, there is a lot of volume in the market, but you need to find, the diamond where they are, and so we are working on that. So I have known the market where it was difficult to have financing, and know it's hard to find the right project, and this is why we're developing organically. So organic development, right return. That's really the thing I'm saying to my team probably every day.